Hey everybody, Brian here from quantlabs.net. Welcome to my analysis of CFDs via a variety of files that you can get through this zip file with a bunch of Word documents and Excel documents. So we're going to go through these and what they mean. First off, CFDs are not recommended to trade with directly through your broker. This data is coming from Oanda. Reason being is, A, they've been banned for a reason in the US. The other big reason, from my own experience, that you can get into CFDs, but just like Hotel California, you can check in, but you can't get out. So the exit, it may take a while. You may, I don't know. I just don't recommend it. But they're still very useful for analysis of what is safe to trade and what is giving you performance overall in the commodities, stock indices, financial product, and commodities. So let's take a peek at what these reveal. So I have the spreadsheet here called CFD rank.xls x, which is an Excel file. This is a massive spreadsheet that one of my Python scripts does provide. You can see here it's over 34, 33 different CFDs. So it's a good variety globally on the indices as well as all of the different commodities. You can see here we have global, US, Japan, Germany, India, Australia, oil as a commodity. We also have some precious metal, agriculture. We also have some treasury. On and on it goes. So let's go to it. So here's the, most of these are technical analysis. So in here I can provide buy and sell signals. And this file will get updated, I'm going to say every 4 hours. But again, this is Oanda. It is global from Sunday night my time, Eastern Standard, which is the same time as New York, all the way out to the end of day business on Friday. So there is activity during those periods. In here you can see we have buy signal, sell signal, head and shoulder, if there is a head and shoulder in one of the Word documents, hopefully we'll see one. Trend difference, those aren't so much. Volume is important to show you. I think one of the key factors in trading is that you're kind of essentially chasing after where the hot money flow goes. This is one of the classic great ways of following where capital goes. You'll see the reports where capital has been going over the last couple of weeks as the markets turn down. So volumes there, momentum on the price. We also have the volatility using standard deviation. We also have different patterns here, like the bull or bear for harmonics, slope. And then we get into some statistics stuff on slope, R-value, P-value. We also have a standard error for minimal, and then the eventual closing out price. So in this spreadsheet, which can be useful, this will show you a long-term analysis where things are turning. So we can do a sort on a variety of columns. So one of them is column N here. I'm using Office Libre, so it can be in any Excel compatible program. So one of the areas I like to do a slope analysis on is on slope column N. So just do a sort here, and I know there is obviously going to be a way better way of doing this. That's okay, I'm just doing it my way, and what works, you have yours, that may work for you, great. Okay, so we have here our slope that's been analyzed. Now again, this is coming out of Oanda. There's some unique characteristics that we should be fully aware of, and I'm not sure if I can sit here and give you, yes, for sure, this is the best way of doing it. but I'm just going to give you my thoughts on this. So we sorted on slope. So here are the basically another way of saying best performing long term on what has been performing well. Now remember, the markets are turning from the stock markets. So we have Hong Kong, Japan, India, Nasdaq 100, Germany, US top 30, China 50, UK top 100, Australia top 200, SPX France, US 2000, which is the Russell. So you can clearly see, based upon the performance, that over the long run, the stock markets globally have performed really well. Top of that, we have another way to view this. So one other way to do it is using momentum, another column that we could try to use. So let's see what we get there. And again, I'm not going to sit here and play around with this, but I just want to show you the different ones. So let's check out momentum, similar to slope. So that's column J. And then we can see where our performance is. So again, US leading, Japan, Germany, India, and so on. So those are the leaders long term. Okay, if you're looking for least volatile or more volatile, you can definitely use columns like standard deviation. As I said, volume can be useful, and so on and so forth. All right, so let's look at the Word documents. So we have some docx files here. Sometimes there may be some shorting opportunities, but when you get a column size or a file size of 37, that basically means it's empty. So, but we do have 3 other Word docs that have some data. These are longs. So these are longs either based on trend, general long, which is just raw data, and then another one filtered on volume. These are going to be more short term. So for instance, if we look at the CFD long Word document here, how it generally works is this format's the same for all of these Word files I'm about to show you. These can be useful. Right now, we are showing buy signals using raw data. Here's the time when the file was generated, so it's only a few hours old. So here we have, again, our standard deviation. I can use that. We also have our volume. If you have not been watching my Fibonacci stuff, with the golden range, meaning is the price within the golden range, meaning it's very optimal to buy. So if it's undervalued or overvalued, depending upon the direction it's going, you may not be interested in doing it unless it's in the golden range. So here's the charts. So the first chart is moving average crosses, classic moving average cross signal. These can be kind of misleading. This one's very useful on trend lines. So you can see this has been on a very positive upward trend. It's undervalued right now because it's not hitting your trend line entry. This is a classic time to get in. But with the markets turning specifically globally and in the West, the Japanese market can be out of all the markets you have to play, stock market that is, globally, Japan is a good one for a defensive play. So that's why I'm starting to feel that this may be a decent area to go into, or an index to put some capital in as a defensive play as the markets turn. Here again we have our Fibonacci levels historically for quite a while. We're using the classic lines here. So what we're wanting to see is between the 382 and the 618. You can see here that the historical price is overvalued over this purple or magenta line. So it is still a good time to get in, but it also depends upon this historical trend as well. Here on a statistical daily return, you can see that it's clearly more positive daily returns with some tail risk here, which is good on the positive side. So this may be a good time to get in. Then we look at the moving average prices with classic technical indicators of RSI, momentum, and then the price. So this is 180 days. Then I narrow it down to 90 days and then 30 days. So this gives you an idea. So you can clearly see here on the 30-day it's losing momentum, and that's because lately that the markets have been active on the US side, so momentum drops. When the markets do turn, especially in the West, then you can see this momentum tick up, and then it's a time to get in because the Japanese yen comparatively is underperforming. Then we get into the long term. This is very important. Long term, this is the top 30 stocks in the US market. Again, this is a special CFD here. One thing to take note here is that we have a sudden long-term up move, down, it's recovered, and it's moving up once again. Has been on a steady trend, underperforming, but again, if it breaks through that trend, maybe it's a potential entry. Again, but it is note that this is pretty well overvalued because it's above the historical Fibonacci levels. Here, this is one of those tough ones where it's more evenly split on the daily returns, but again, there's more tail risk here on the negative side. So beware of that. If there is a sudden announcement through news that you could see a fast moving negative. Here, the 180 long term, it's holding pretty good. Momentum though is something to watch at 0. So that's definitely neutral. Still, we've gotten some upward trends here. But here's what you want to watch. Is it still, again, at 0? It's been doing okay for the last 5-6 days. So this is a tough one. You will find other better indicators, and I'm going to show you those in the other Word documents. So here, let's see, we'll do the one on trend. No, let's do the based on volume. And we'll come back to the trend one. All right, so as this loads up, now this is how it works when you get more data or more instruments to work with. The condition here for CFD based upon volume is we want our CFD volume to be greater than 100,000. So these are the only current ones that give you that stat. One thing is the group selected. So what that does is that with the group you get a group mean, as well as the volume mean, as well as the volatility mean, as well the average. So what you can do now is you can go through this and compare the individual standard deviation against the group volatility. So you can clearly see that the US top 30 is less than the group volatility. So that means this could be a smoother ride up if that's the trend you're going, because this volatility is lower than the mean. Again, you can go back in the spreadsheet and figure all that out as well, in the rank as well, because you have, if you want to measure volatility on that instrument, you have this column to sort to give you that, to confirm it. All right, so knowing that, we can also do the same thing with the volume. If you do decide to trade CFDs, I'm not going to get into that, but you can clearly see that the volume is, the top 30 is lower than the group volume as well. So again, we give you the gold Fibonacci here. You'll see it in a minute. But again, see right here, this has been a great time to buy, because there's none of these false positives that will mess you up. But again, we have the trend right there at the entry if the momentum is there. But here's the problem. it's clearly overvalued, overpriced. There is evenly split again. But again, there's a more negative on the tail risk here as well. So again, you see the trend, blah, 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 blah. Talked about this one as well, so I don't need to hammer that to death. Here's an interesting one as well, is the Deutsche 30. Again, you can compare the standard deviation as well as the volume. You can clearly see what's going on there. It's really messy with these. Trend line is good, but it's been hammered down pretty hard. So will that come back? I can't say. Very tight, virtually no Fibonacci, so it's been pretty well not moving a lot. Here, again, evenly split. That's a tough call. Has been hammered down, trying to recover. I don't personally think it will. Can always use these momentum and RSI to verify all that. So in the short term, it's actually looking pretty good on, with a very positive momentum. But that may be because of the U.S. So if it's with the U.S., then that means that why deploy your capital in Europe for underperformance when you can deploy it into U.S. markets for better performance. So here's the Nasdaq 100. The volume's fairly high. I believe that the standard deviation of the volatility is lower than the group, which is good. Again, it's hitting that trend. So if it does continue, now's the time to get in. But when you take a look at, Fibonacci is just too high. So it's too overvalued. Again, stats, I don't know. Nasdaq, it is on an upswing. But here, look, zero. Momentum, looking good. But I still think if you're long, buying the dips, buying at the lows, that's probably the preferred method. Give me a second here. Yeah, it's like mission control here. Okay, so let's continue. So here's a Hong Kong. This has been performing really good too. Same thing. So it's all correlated sometimes. Here in the Fibonacci, slightly lower value, but again, it's an equity index, so something I would not get too involved with. But look at the negative side as well. Tough to say. Positive momentum, but you can always go through these reports. This could be hitting its peak on a 90-day, hitting its peak here, so it may start to go on a downside. Specifically, well, last few days there's been basically riots in Hong Kong. Don't ask me why it's acting positively, but there's your data and performance. And again, one of the unique things about Oanda, a lot of traders are based out of Hong Kong. That I can tell you. Okay, let's look at the last report here. So we've looked at this one, filtered on. So we're going to look at the next one based on trend, and this one's a little more interesting. This is how I feel about things, looking at these based upon experience of the CFD stuff. Here's the batch, okay? So this is based upon trend line slope that I went on about in the spreadsheet. And here's our first one. Again, always remember about the standard deviation, group volume. Here's our number one. Now, I say this is number one because it's been on a steady move. Personally, I think the markets are going to tank. But this is what they call the gold-silver ratio. And this one usually performs fairly well as a defensive play. So you can see it's been on a nice steady uptrend for a while, but it is kind of overvalued on a historical level. Also, there has been more negative because probably people are seeing the outlook of thinking that the markets will turn, but they actually haven't. So that's one of the gotchas there. And here you can see the volatile moves on the 180. And here is just this massive down extension. Look at the next few days. Nice moves up. And the momentum's been positive, but it's been flattening out lately. So that's probably one of the better ones. 30-day, it has been kind of flat, but that's more of a hedge, this instrument. The next one is, what are we looking at here? So another one as a defensive play, this is probably your best defensive play right now, I think. The gold and silver ratio, as they call it. Standard deviation trend line. Again, you can do the comparison of the standard deviation or volatility and the trading volume against the others. But here's the one. U.S. bond, a 5-year. This may start to move up, but it's been on a downtrend because obviously it's a indirect relationship with the market, especially the performance of the U.S. markets. They've been up, so this goes down. So this may start to flatten out and then start tilting up. But it also depends on the U.S. debt level as well and how they handle that, how it gets impacted by trade wars. So again, this could be your classic buy in the dip, which it may actually start to turn. But the point is, you can see it's clearly more negative than positive. Again, here's your long-term views, flat for the last 90 days. But again, look at the momentum starting to get kind of positive. So that might be more capital, hot capital as I like to call it, is moving into that asset. So this one's not so bad on the 30-year. Guess it's got a higher yield. Barely been moving with a Fibonacci, but again, this is where it's below the performance historical. So this might start to move up because it's not in that golden zone between the magenta and green line, which is a golden zone. So this might start to move forward and move up. So this is the again, the 30-year U.S. Treasury. So you can see what's happened here on a historical level. RSI was much higher than what it should be at 70. Typically this would drop down, but this is when the markets really went into a panic mode and people just kept piling into it no matter what, and they kept driving up the price. The market got better and it's been flat since. So this may take off again if the markets start to tank or if there's more trade wars news that's negative. Another one is, which one? So this is the Euro markets. This is an interesting one. Been very flat, hitting that trend. I think this one will get clobbered no matter which way it goes. It's underperforming against the U.S. and it's kind of probably not going to do well moving forward if the Japanese, the gold silver ratio and Treasury starts to do better. So this one may get clobbered pretty bad. So this is, look at the momentum's probably the one I look at. So momentum's not too bad. But again, it's all related around the U.S. markets. One last peek, 10-year downtrend again. Undervalued. So this may turn positive. That's an evenly split on the daily returns. It's kind of been a flat range, but there you go. Just in the last few days, it's been moving up. So one way to use this report and how to watch the markets day by day using this. So these get updated every 4 hours. Just wanted to let you know what's been going on, and we shall talk to you later. Have a good day.